Hello, it's Simon here from FTSEday. It is the 25th of June 2012 and it is close as makes no difference to 4:45 in the evening. We've had a really good day today on the markets and I'm going to tell you why. Well, first we'll start off with what we do pre-market. It's important to sort of get your head clear and decide how you're going to trade for the day. Stick to your plan, and we'll talk more about business plans and whatnot later in this video. But for now, we'll just briefly describe the sort of thing we do. I mean, what we try and do is we try and we try and look for a bias for the day, whether it's going to be short, whether it's going to be long, or whether the market's going to be range bound. Today we called it short for various reasons I won't go into, and not surprisingly, it's played out very nicely. So that was we were just looking for trade short all day. You may have heard the phrase, hopefully you've heard the phrase, the trend is your friend, and basically that practically means if you're trading with the trend, you increase the probabilities of success, and that since trading is a probabilities game, we're always open to how we can do that. The second thing I'll come onto is our vertical lines. You may think that these are drawn on after we trade, which is pretty easy to do, but it's not. Most of them are drawn on before we trade. They are previous levels of support and resistance that we've identified and that we're well aware that the market's going to end up playing to. And we'll talk about some of the trades we took with those, but first I'll just chop off half of the market. If you are looking for setups and you do have a plan, it is sometimes a good idea to do this with the market. Just chop off the latter half of the day and then just scroll across, and it sort of gives you a reasonable simulation of what was on offer. Because like I say, it's very easy to trade completely retrospectively. We'd all be millionaires if we could. So the market's opened at 8 o'clock. I'm on 5-minute candles here with the usual moving averages 12, 6 and 3 that we use. It's hit 5500. If you watch some of our videos, you'll know why these are such significant numbers. The market always plays around. So have a look through your previous charts, 500, 600, 400, 300, and have a look how price action and how levels hit them. They are, they're like a gravitational force often. Since we had a short bias, some of our members took a short here. The next 5-minute candle gave 10 points straight away, so if your plan was to make 10 points a day, you could have been done by 8:05 in the morning, which is always a fantastic place to be, providing you've got the trading psychology to be able to shut off and go and do something else, which is something people suffer from. I personally don't. If I've made my targets, I don't care, but I didn't personally take that trade. So the market's gone down. It's carried on going down, and it's found a bottom with this wick here at 75. Now, that was a level that was previously drawn on the charts. It was a previous level of support and resistance. If you zoom out onto the 1-hour charts, you'll be able to see where we've got that from. It's good practice to do that. Zoom out onto your charts and try and identify significant levels of support and resistance. And just, even if you're observing, just look how the market plays to them. It does so constantly. It's then come up and found 90 as a resistance level. If you're into your candle theory, you could consider that that's a indecision candle, but I'm not particularly I don't particularly buy into candle theory that big, but it certainly worked there. It's come down again. It's not wanted to test 75. It's gone back up to 90. It's carried on 75, banging its head. It's the market's telling us. What's the market telling us here? It's telling us there's no more buyers over an hour period. So I know some people in our room shorted 90 and made some points from that. And we move a little bit further on into 10 o'clock. These red candles, there's a little bit more momentum with these, particularly this one. It's smashed through the 75 level. Because we had a short bias, we weren't looking for a double bottom there. It's gone straight through it to break out, and that's a trade I took. And quite amazingly, it played to the point, should I say, of 5467.8, and that line again was put on before the market opened. Previous lines of support and resistance. So it's just, it could be so simple sometimes. Once you trade in sync with the market, even if it's just a bait, you don't need to be totally in tune with the market. Even if you just, with the trend, the saying is the trend is your friend, and what that practically means is that the probabilities are in your favour, and in this game it's all about probabilities. That's what trading is, and we want the probabilities to be in our favour as much as possible. So the market's found its low there at around 10.15. It's come back up, tested 75 again. Look how these levels are changing from support and resistance. It often does this very, very well when you're in a trending day. It's just a case of knowing when the level's going to break, particularly if you're going to counter trend, you go long today. So, like I say, our bias was short and we were only taking shorts today. Well, that's not to say you can't take points going long. You just probably have to have shorter targets, but it is higher risk. We'll carry on. The market's decided to rally back up, but not bother testing 90. So carried on down. Once again, the 67 level has become key to find support. So if you are taking shorts, say you got in at 90, it's a case of the 67 level, 75 level and the 67 level, as previous levels of significance, can become your targets. Talk about trade management, getting into a trade, when do we get out to a trade? It's really important to do. So that's what these levels also do. They give you targets for exiting, or if you're more advanced, scaling out and things like that. But that's certainly beyond the scope of today's video. And we'll carry on. And the market, again, we've had another breakout, which we expected. I took that one again. I can't remember when I got out. I think I got out around 50, which was this very nice candle here. Although again signals a slight reversal, or at least a relief rally, if you like. People have to take profit, and therefore the buyers outweigh the sellers. The market goes back up. It's carried on down. The 40 level was, I can't remember when I put that on my chart, but it was quite a few days ago, maybe even longer. And the market, the wicks haven't respected it. They've gone slightly through it, but since we're short, we're not really bothered about that. But the bodies of these candles are respecting it, and the market's currently respecting 40. I'm not sure what it's going to do later on, but I don't really care because I've made my targets for the day. In fact, I'm not far from making my week's targets, which is fantastic. So that means I can really, really pick and choose the days and trades I want to trade, and which is a fantastic position to be in. And that brings me on to having a brief discussion about trading like it's a business, which it is a business. You often hear these statistics bounded around that 80-90% of people lose at trading, and the reason that is because they see it as get rich quick, and they're not prepared to think of it as a business. There's quite a lot of psychology that if you really plan it like a business, have a plan, have record keeping, and you can almost treat it like a separate entity to yourself. But again, that's slightly beyond the scope of this. So I've nearly made my weekly targets at the moment, but equally tomorrow if I trade, I won't be risking the full amount I made today. It's all about risk management, and rule number one, which hopefully you'll know, is preservation of capital, because without capital we cannot trade. So that should always be our view. Is that how can we preserve what we've got? That doesn't mean there's a balance. That doesn't mean hesitating from taking your trades. You need to execute your setups often without hesitation or reservation, because after a long enough series of trades that the probabilities are in your favour and they'll play out. So it's a balance, and it's a journey to get there. But so in summary, it was a case of just looking for pullbacks to go short on, and it's happened all day, and it's been a pretty good day, a pretty easy day. There's been some good price movement. We've made our targets. We don't know what will happen tomorrow, but we'll do the same again, apply our setups, and make our money. It's not to brag, but I don't think I've had a losing week since I started trading at FTSEday. That's nothing to brag. That's a case of what can happen if you have the right structure and environment in order to succeed. And I certainly don't intend to make this week my first losing week. So I'll see what the market offers us next week, and I will speak to you soon. If you have any questions about anything, I'm not trying to sell you anything, because quite simply I don't need to. You can email me at simon@ftseday.co.uk, and we can have a chat about things, particularly if you've got any issues with your trading at the moment, such as not taking losses, you're losing on losing streaks, don't have a business plan. I'll quite happily discuss those things with you. So that is bye for now.